In this video, I'm going to show you guys exactly how you can scalp the 5 minutes chart the right way. And yes, I'm going to make everything very easy and simple for you to understand. Nutshell type of explanation, scalping is actually going in and out of the market in just few minutes, or not in hours, but just few minutes. So if you've been trading in hours calling it scalping, obviously you're not scalping, you're day trading. Basically, if you want to scalp the forex market, you actually trade it in 5 minutes and 15 minutes. And before we continue through the video, please don't forget to smash that like button and also to subscribe to the channel if you're new here. And you love the vibe, you love the energy, just tap that subscribe button and please don't forget to smash that like button. In this video, I'm going to show you guys a scalping strategy that you can use on the 5-minute time frame. But before we dive ahead into this strategy, I want to show you guys something really important, which is market structure and pattern. That's very important. So let me just bring out it. So I'm going to be using part for that. Like I want to make a very quick explanation here. So when we say price is in an uptrend, that means price is actually going through this push phase, exhaustion. As you guys could see this market structure, we're already seeing that this is an uptrend. So you can see that once price wants to exhaust, it actually lands on this point here. So I want to bring you guys something here. So let me use, I think I need to change that color back to white. This is exactly how price moves. It comes to retest this zone here, this zone here. So now, as I've shown you guys that we are going to use that on the chart, and I'm going to show you guys how we are going to use it. So as you can see, price is in a downtrend. Now I want to show you the indicators that you can actually combine with this market structure too. So the first indicator we are going to actually impute here is actually the Heikin candlestick. I don't know if you guys have heard about it. That is only if you're using Tradingview, but if you're using MetaTrader 4, I'm sorry, you can't get this. So I want you guys to look up here. So as you guys can see here, these are actually symbols that we're going to be trading. These are actually symbols. So right here you can see stock, futures, forex, and right here we're in GBPUSD, which is the forex pair. And the second side is actually the time frame we're in, which is the 5-minute time frame. And this third part that you can see up there when you're in the Tradingview charts, you could see candles. So what we're going to do there is that we're going to tap into candles, and all the types of charting method you can actually use are right here on Tradingview. So Heikin is basically what you're going to be using, and I'm going to show you guys what Heikin is all about. So let's tap into Heikin and just try to all load up in a different screen. So I know what you're saying at this moment. Why is everything looking so different? But yes, everything is looking so different and very simple too. So it's not just different, but it's simple for you to read and understand the candlesticks on the chart. So I'll make a specific video about Heikin, but if you want to get the video that I'll make specifically on Heikin, make sure you guys stay subscribed, turn on your notification, because that video will be coming out soon. So if you're having a hard time understanding the normal candlesticks on the chart, Heikin candlesticks help you to understand everything very easy. So remember what we said about uptrend and downtrend. When we are talking about downtrend, we are not actually expecting the market to go straight down. We're actually expecting that kind of retracement, little retracement, then a continuation downward. The Heikin candlestick actually made it much more easier to notice those changes happening. As you can see, this will actually save you a lot of stress in trying to find out market structure. So from the look of things, you can see that price is clearly in a downtrend, but the Heikin was actually giving us those retracements when they were happening, those exhaustion when they were happening. You can see the exhaustion when it was happening right there. Right here, exhaustions. So you could see the Heikin actually made it more easy for us to interpret these things that are actually happening in the market. So what we're going to do is that we're going to add in a special indicator. If you're not new to this channel, I guess you might know what I'm saying. So if you don't want to be new in this channel, go ahead and smash that subscribe button so you can actually join the family. So let's add in the moving average. For the people that are actually new here, I'm going to actually set this indicator up. Go to the setting. Let's go to settings. Inputs, will increase this to, you have to make one to be 25, so let's make this one to be 25. So 25, and let's make this red, right? Let's make this red, and let's make this more visible to our eyes. So thickness will make it, yeah. Let's go to the second one, and inputs, let's make this twin, and style, we can make this let's make this yellow. I don't know, any color that you love, you can use that, just any color that you love. So if you have a better color, if pink is your favorite color, you can use that, as far as you're able to understand what's happening and every other thing. So let's add in that, let's add in our indicator. So right here we have added in the ingredients for this scalping strategy. So let's now get into the rules for this strategy. When are the points of entry? When are the points of exit? What should you do? What you should not do? Let's get into that. So let me explain the moving average. Once price is below the moving average, you are actually expecting a sell, and once price is above the moving average, we are expecting a buy. Right now in this chart, we could see that price actually went below the moving average, and yes, this is actually the best point to take a sell. So let's put in that sell position, and your stop loss could be above the recent high of the market, which was this point here. Once you see price going above the moving average, you can now close in and lock in your profit. So as you see here, if you're actually using this strategy, this would give you risk 1% to actually make 4%. Not every strategy is 100%, right? Nothing is 100%, and we could see here price actually went above the moving average. We're actually looking for a buy, but in this point here, price actually had to go below the moving average. Okay, that is a little L, but with your profit from this one, seriously, you're seriously in profit. You're actually having small losses with huge profits. Simple. Small losses with huge profits. If you guys love this video, don't forget to hit the like button, don't forget to subscribe. So with that being said, guys, you know what I do, I'm out.